Welcome to the Cardinal Commentary for the foreign equity portfolios. The S&P 500 was the top-performing index in the world in 2024, returning a whopping 25% and hitting all-time highs month after month after month. There were several drivers of this performance, including mounting excitement about artificial intelligence, or AI, and the capital spending spree needed to build it, as well as a number of interest rate cuts and stable economic growth. Every new technology, dating back to automobiles and the railroads, right through to the internet, has begun with a frenzy of investment. And the build-out of AI, including semiconductors, fabrication plants, data centers, and power plants, is on pace to be the biggest of all time. As the spending spreads to additional sectors, we expect many of the companies in our portfolios, such as T-Mobile, Broadcom, Applied Materials, Cummins, and Oracle, to benefit significantly. There's an odd downside to 2 strong years on the S&P, and that's growing concern about the valuations of many of the very stocks that propelled the market to such heights in the first place. For example, just 10 companies accounted for 40% of the index's growth in 2024, and they trade at about 30 times earnings. President and Chief Investment Officer Evan Manser says it's a lopsided market that you could divide into the S&P 10 and the S&P 490.
If you're looking at the S&P 10, it's very expensive. So, over 30 times earnings or around 30 times earnings, that S&P 10 makes up 40% of the total market. If you look at the S&P 490, it's trading very much in line with its historical average, maybe, close to 10% above the historical index value. So we don't have big worries there. When we look at our portfolio, most sectors are fine. We do own technology companies in the foreign side of the Canada Plus. They're quite expensive, more than what we've usually allowed in the portfolio, but they are growing fast and they're relatively cheaper than those S&P 10 companies, and so we're still holding on to those.
15 of our companies increased their dividends in 2024, led by T-Mobile at a very impressive 35%, followed by Sony Group at 18.8% and Wells Fargo at 14.3%. T-Mobile is one of those companies that we believe can weather any storm. The telecommunications giant didn't start paying a dividend until late 2023, which was our catalyst for buying it in the first place, and the 35% dividend boost in September has only reinforced that decision. In fact, company management says to expect double-digit dividend growth for years to come. We almost always have a positive outlook on the market, and this year is no exception. We are calling for a 15% return in 2025. History shows us that the market goes up about 80% of the time, but there is one significant black cloud on the horizon: the impact of Donald Trump's trade war with Canada and Mexico, which is changing day by day and sometimes hour by hour. Manser thinks the political talk of today will be different from the reality of tomorrow.
If you set your hair on fire every time President Trump makes a statement, you're going to have a lot of anxiety. Our call is that things are going to be a lot cooled down in the end from the rhetoric right now. If you look at the tariff situation, for instance, the main complaint is that Canada is running a $100 billion trade surplus with the U.S. And that's true, but if you look at the nature of that surplus, it's essentially all oil and gas, or oil, really. And oil is close to $100 billion in the surplus. The third rail of politics is you do not raise gasoline prices. So we see almost no chance of a 25% tariff on oil. That would be not a politically savvy move.
All of those dividends have led to excellent returns net of fees over the last 2 decades. And here's the proof. If you had invested $500,000 in this portfolio in 2002, it would be worth nearly $3.2 million today, outpacing what you would have earned in the benchmark by nearly $350,000. And all of this demonstrates our commitment to clients, a common sense path to long-term wealth. Because it works. And that's the Cardinal Commentary for our foreign equity portfolios. Thanks for joining us.